In this video, I'm going to share with you a mistake that I've made in the past. And more important, I know some of you are making this exact same mistake right now. So the question I'm going to answer for you now is, how can you maximize the amount of interest you receive on the cash you have sitting in your brokerage account? If you're watching this video, then it's quite possible that you sell options. And when you sell options, you most likely are using margin. Because of that, you tend to have extra cash sitting in your account. Here's an example of that. Let's say that you've sold one cash secure put option contract. Let's say the strike price of the put option you sold is $100. Because of that, you're going to need $10,000 if this put option is assigned to you. But as you know, I like to sell put options that expire farther out in time. For example, 30 to 50, even sometimes 365 days into the future. So although I may need that cash in the future, I don't need it when I'm selling that put option. As a matter of fact, in my portfolio margin account, I'm required to have about 1/10 of the cash I would need, or in this situation, instead of needing $10,000 for that $100 cash secure put option I sold, I would only need about $1,000 in my account. That leaves me an extra $9,000 just sitting there doing nothing for me if I don't work it. Here's why it was a problem for me. Notice the interest rates that different brokerages are paying right now. And this is on idle cash that's uninvested in your account. And as you can see here, it ranges the whole spectrum of brokers. For example, here you see a statement from Robinhood. Notice how much interest they're paying you on your cash. If you have a regular Robinhood account, it can be as low as 0.01%. Now, if you have a Robinhood Gold account, well, it's a lot better at 4.5%. And then here's another broker I know a lot of you use, which is Tasty. Notice the interest they're paying can be as low as 0.01% also. So how do you maximize the cash you have set aside in your option trading account or in your stock account if you're not using it? Well, that's what I'm going to answer for you in this video. Where should you put your idle cash to maximize the interest you can receive on that cash? I wanted to share with you how much interest brokers are paying because as you can see, it's pennies. It's next to nothing. And back several years ago when interest rates were lower, well, that's what we expected. But now that interest rates are higher, as you see, a lot of brokers are still paying next to nothing for the cash you have sitting in your account. All they're doing is using your cash to make money, and they're not paying you anything. So what can you do with that idle cash to maximize the amount of interest you collect on it? Well, here are some ideas. Let me first show you how easy it is for brokers to do this because they were doing it to me. I'm showing you the past 12 months history here of the interest I collected in this account. Now it is a smaller account. It's had around $40,000 to $50,000 during this last 12-month time frame. But notice here on the far right how little interest I was receiving on the extra cash I had sitting in this account. Now because this interest was so little, I was trading this account in a special way. And I'll share that technique with you in just a minute. But let's first focus on this interest. As you see, I was receiving next to nothing. And I had thousands of dollars just sitting there idle in this account. That brings me to the first way you could consider trading if you have extra cash sitting in your account. Now, most of you know that I like selling cash secure put options. When it comes to option trading, selling cash secure put options is my preferred way to trade options. And because of that, we have a lot of idle cash sitting in those accounts waiting to be deployed. But one way to offset your broker's lack of paying you reasonable interest is instead of doing cash secure put options, you might do covered calls. Let me show you how you can use selling covered call options to help offset not receiving interest on idle cash. So if you're trading options, you can do one of two things. You can sell them or you can buy them. In this case, we're going to sell options. When it comes to selling options, you can sell a put option or you can sell a call option. Let's say you are bullish on a stock. In this case, we'll take the S&P 500 or the SPDR. Notice the difference in return between selling a put option and a call option. So right now the market's trading for around $576 per share. If we go to the at the money options, we're going to look to sell the 575 cash secure put option and covered call option. And we're looking at the March 21st of 25 expiration. The expiration is about 136 days away. Now notice the return over here on this put option. The return is right at 8.3% annualized. Now we stick with that same 575 strike price. Notice what the return is on the covered call option. It's 12.1%. So if we do the math, we take the 12.1% minus the 8.28% of the cash secure put option, then you see we're receiving about 3.82% more per year for selling the call option as compared to the put option. Part of that is because you're being compensated for theoretically owning shares that you're selling these call options against. So part of it is because of an interest rate factor. That's why I say if you're not receiving much interest on the cash you have sitting in your account, you're selling cash secure put options, then you might consider selling covered calls instead. And that's what I did for quite a long time in my small account. But I believe there's a better way to deal with this situation, and it's the way that I dealt with it. Instead of selling covered calls, I decided to sell cash secure put options and actually turn them into bullish put credit spreads. That meant that even in my retirement account, my broker didn't require I have as much cash as if I just sold a cash secure put option. So for example, if I sold a $50 cash secure put option and I sold one put option contract, then for that 100 shares worth, if I had a cash account or wasn't allowed to use margin, I'd be required to have $5,000 in that account. But if I took that same $50 stock and sold that same $50 put option, I could then buy a $45 put option to cap how much cash I was required to hold in that account. In this case, instead of $5,000 cash sitting in that account, I'd only be required to have $500 in that account. I could then take the extra $4,500 and do something with it to amp up my returns. And I don't have in mind letting it sit there in this broker who doesn't pay any interest on that cash. This is what I have in mind, putting in something like SGOV to receive nice interest on that cash. And here's how I traded in this SGOV ETF. Whenever I needed cash, I'd sell some of my SGOV position. Whenever I had extra cash, I'd buy some of that SGOV position. And that worked because my broker doesn't charge me any commission to buy and sell an ETF. If yours charges a commission, you just need to run numbers to see if it's worth it. But for me, since I don't pay commissions on ETFs in this account, it was a no-brainer. So I bought and sold this ETF whenever I needed money or had extra money, and that improved my return. Before I share with you all the details on SGOV, let me give you a couple other options. I'm gonna give you 3 total. Here's the first one. The first one is SHV. There's a couple things you want to consider besides the stability of the ETF. First, as you see here, this is a short-term Treasury Bond ETF. And you want to look at the return. Notice the return here is 5.15%. Here you see the 5-year history. And you see the expense ratio. It has a pretty nice low expense ratio at 0.15%. But this to me is my least favorite of the 3 I'm going to show you. Here's the second one. I know a lot of you use BIL, and its ticker symbol BIL, otherwise known as BIL. And it's the Bloomberg 1 to 3 month T-bill ETF. And its return is better. It's at 5.22%, and its expense ratio is a little bit lower at 0.014. So maybe a little better alternative than the one I just showed you. But I think there's one that's even better, and it's the one that I've been using, and here it is. It's SGOV. And it's a 0 to 3 month Treasury Bond ETF. When I was preparing for this video, it was paying a 5.22% interest rate. And notice its nice low expense ratio. It's at 0.09%. So those are 3 ETFs you might consider researching a little more to see if it's a good place for you to park your idle cash. Before I show you why this is so important to pick a good spot for your cash, let me ask you, where do you park your idle cash? Does your broker pay you a nice high interest rate? If so, what broker is that? Or do you park your cash somewhere like BIL or SGOV? Let me know in the comment section below where you park your idle cash. And here's why it's so important to watch this piece of your broker's account. Here you see a list of the interest payments I received from E-Trade on the previous 12 months. Notice it was pennies. The highest I received was a nickel, and usually it was a penny to maybe 3 pennies per month. Once I switched over to buying SGOV, notice how much interest I was receiving. Now I was preparing for this video, it was in September, so I had a few months worth of history here. But notice as I began to transition from covered calls into cash care put options, notice what happened to the amount of interest I was receiving. It went way up. Now last month I collected over $93 on just interest in this small account. If you have a larger account, that interest can really add up. As a matter of fact, here's the interest I've collected over the past 12 months in my larger account. So as you see, this can really add up and it can greatly improve the return you're receiving in your brokerage account. If you don't know if your broker pays you a fair interest on the cash you have sitting in your account, go ahead and contact them and see how much interest they're paying you. If they're not paying you much, try and negotiate a higher rate. If they refuse to raise how much interest they pay you, then consider putting it in a safe product like SGOV or like BIL or some ETF similar to that that's very stable but pays you a nice high interest rate. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you're watching this video, then you probably trade options. And if you trade options, you want to be as profitable of an option trader as possible. If you'd like to see some of my favorite tips and tricks that I use to be a profitable option trader, check out the video series at the link above and description below entitled Trade Options Like a Pro. Until next time, happy investing, and we'll see you again soon.